Snapchat literally just snapped the entire stock market. Take a look right here, down 41.63%, and it might even go a little bit lower. But why is it crashing? What can we expect for the future? And how could we potentially make money off of that? That plus more discussed in today's video. Now, you might be wondering to yourself, is Snapchat crashing as a result of some bad earnings that were just reported? Nope. Did the app just crash? Nope. Instead, the company came out halfway through the quarter to say, hey, we're not going to do as well as we thought we would. And actually, we're going to slow down hiring in our company as a result of not making enough money. So that obviously set off warning flags, warning bells, and warning sirens to a lot of different investors. And that caused a lot of fear, causing this to tumble down and bring other stocks down with it. So that brings up an interesting point. What is the deal? Well, I'm going to show you what the deal is on the form that they actually released just yesterday, which basically catapulted us to the graph that we just looked at. Now, just for fun, are you a Snap stockholder? If so, how you feeling? Comment down below and let me know. But here is some guidance that might help explain what happened. So right here it is. This is the Form 8K that Snapchat issued just yesterday. Now the Form 8K goes to the SEC and they're based on the quarters. Now quarter 2, 2022, that means quarter 2 is April, May, and June, which means that they would announce their quarter 2 earnings in July. In fact, I think it's already scheduled for around July 7th. They're basically coming out even before July to say, hey, it's not looking good. We're just going to tell you it's not looking good right now, causing more fear. So check this out. Since we issued the guidance on April 21st, 2022, they're basically blaming the economic environment as deteriorating further and faster than anticipating. They're basically saying the economy is not going well, and as a result, we think we need to dial back what we were aiming for. So they basically come up with a range, and they say, hey, in this next quarter, we think we're gonna be up here at the best or down here at the worst. Well, what happens is they're coming out and saying, hey, you know how we said this was the range? We're probably gonna be down here. Yikes, right? And of course, nobody wants to hear that your company is not doing well, that you invested all this money into the stock and now you're not going to perform. So that results in fear. Fear results in stock sell-off. And then everybody wonders why it's happening, and two things could happen. You sell off as a result, which means if you bought when it was at the all-time high, you are losing a ton of money as a result of selling. That's called a realized loss because you're actually selling for a loss. And there's also people that wonder, should I buy in, because this could be a potential buying opportunity if it goes back up to where it was. Now, they are anticipating in quarter 2 that they're going to report revenue and adjusted EBITDA below the low end of that quarter guidance range, as I just mentioned. So this brings us up to the interesting point. What's going to happen next? Now, you can go over here to Yahoo Finance, and I think this is really important to look at. On Yahoo Finance, if you come over here, first of all, I want to zoom out to just kind of show you what's happening. Here we are down at 1310 as of the recording of this video. Let's go out to the last, let's do 5 years just for fun. Look at this ride Snapchat has been on. So if we're down here, if you scroll across, the last time we were down here in the 13s was, look at that. Oh man, that is back during the pandemic. March of 2020 was the last time that Snapchat had this kind of price to it. This could be potentially a good thing if you feel confident with the company's future. How do you know if you can be confident with the company's future? There's a couple ways. The first thing is right here on Yahoo Finance. This is absolutely free. This is not sponsored. I'm just showing you a free tip here. Just come over here, type in Snapchat, and then go over to where it says financials. This financials tab is where you want to click, and then we're going to take a look at what's going on a quarterly basis. So I'm going to click on quarter. Now, it's not going to show you everything unless you pay for their upgraded service, but if we take a look here at what we can see, here you have revenue last year at 769 million. Then it shoots up to 982. That's great. And then 1.06 billion. And you can kind of see that it's starting to see a little bit of success. Now, the first quarter is always the worst quarter when it comes down to overall advertising revenue. Now, Snapchat, just like YouTube, makes most of its revenue from advertisements. So as you're using this free app and you're playing around with it, ultimately what happens is eventually you're going to be served some type of ad. And when you're served that ad, they make money. And just like in YouTube, what we typically see is the last quarter of the year, when it comes up to the holidays and all this other stuff, there's a lot of advertising revenue pushed in because a lot of advertisers want to get their message in front of you, the consumer. And in order to do that, they need to spend some extra money. Quarter 1, it's kind of lame. Holidays are over. The new year has begun. and we're just starting off a fresh new year. So it is typical to see the first quarter results lower than typically the fourth quarter of the prior year. So I'm not too worried about the fact that we went from 1.2 down to 1.06 billion as a result of this income statement that we're looking at. However, what will be interesting to look at is in July, when they do actually report their quarter two earnings in Snapchat, will we see 982 or less? So if they were thinking they were going to make $1 billion, $1.1 billion, and it comes down to 982 or lower, that might instill some more fear, and it'll be interesting if this sell-off goes even lower than $13. You could buy in today, and this could go down to $5 a share. You just never know. Right now, it's a very volatile market as a result of the recession. And that brings us to this very important point. What we need to look at as investors is what's actually happening in that macroeconomic world. So if you look at Snapchat, for example, they make most of their revenue from advertisements. As a result of them coming out before the earnings even happen and mentioning that we're not doing as well as we thought, it's pulling down Alphabet stock, which is ultimately Google, which is ultimately YouTube. It's pulling down Facebook, Meta, and it's pulling down Twitter. Now, a lot of these companies also rely on advertising revenue as their primary source of income. So the concern is if Snapchat is saying, hey, our revenue is dipping down as a result of advertisers either lessening how much they're willing to pay or pulling out advertisements altogether, this is going to cause concern for these other companies, which is why we're seeing Google, Facebook, and others start to dip down today as well. Not as much of a cliff as we saw with Snapchat today, but it is still of concern. So what we need to keep our eye on, though, is ultimately, and as it says right here in the Form 8K, our community continues to grow. We continue to see strong engagement across Snapchat and continue to see significant opportunities to grow our average revenue per user over the long term. Right now, Snapchat holds about 75% of the market share of ages 18 to 34. So if ages 18 to 34 across the globe are using Snapchat, there is an opportunity that this could continue to grow in a positive way where people are going to continue to use the app and eventually advertisers will come back in. One of the key factors that I am keeping my eye out on specifically is what happens in the economy. Because Snapchat is focused on advertisements, we need to make sure that the economy does not cool off to the point that that's going to continue to drag down advertising revenue. Think about it this way. We just looked at Target last week as a result of some of the stock market sell-off. Now, if Target, having the issue that they had with lower revenue than forecasted, that is telling us a little bit of a sign that people are looking toward more essential purchases. They're going to the retailers getting what they need, not necessarily what they want. So if electronics are starting to come back down, if TV purchases come back down, and if Apple products even come back down, I think we'll continue to see a little bit of a pullback on some of those type of stocks. As a result, though, advertisers are not going to be willing to spend that extra money if they're basically putting out an ad to somebody that only is relying on the essentials. They're not interested in getting some extra frivolous things. As a result, why spend the money? So Snapchat's not going to get the revenue that they once did as we look back here in 2021. If that can continue to correct itself and get back into a better environment, then at that point we could see advertisers flooding back in to try to attract attention from their consumers and ultimately give Snapchat some more revenue. Same thing with YouTube and all the other ones. Because one key point, even though they're retracting their hiring and things are going into a little bit of a recession, this could be an opportunity to look at what is actually happening with revenue. I'm not looking at seeing that revenue is going to drop significantly, certainly not go negative at all. Profit, net income will probably be negative as it has been, but revenue should still be somewhat maintained. It's just not going to be up to the moon as they thought it would be. But are we going to still see some overall increasing opportunity here to say, okay, even if this falls down in quarter two of 2022 to maybe 982, maybe even less than that, maybe they only report 769, which was the same revenue it was on 3/31/2021. Okay, that'll continue to pull this down. But then what I want to see is as the economy starts to grow again, are we going to see revenue grow? And if it does, and Snapchat remains true to their business model and their growth strategy, then we could get excited about the opportunity to see this go back up. Because right now, there's still a price estimate of up to $45 a share. Now, as I look down here, similar to Snapchat, look at this. Facebook down 8%, as I mentioned earlier. Google down 5.38%. So if we look at those right there, they have not issued any guidance, at least right now they haven't as of the recording of this video. But what if they come out and they actually meet or exceed their revenue targets in quarter two? Even though the economy could be pulling against them, maybe they have some additional strategies to make up for that. What'll be interesting is, as a result of this pullback, only due to fear because of what Snapchat put out, this could be an opportunity to look at what their fundamentals are looking like and looking if that could be potentially a buying opportunity for Facebook, Google, Twitter, and even Apple from the standpoint of what that's going to look like. But as always, never advice to buy, hold, or sell any type of investment. What do you think of Snapchat? Drop me a comment down below. If you want to see more videos like this, let me know as well, and make sure you subscribe for more. Check out this video next, and we'll see you on the next video.